Hi guys, this is an S&P and Nasdaq technical analysis update for Friday, 29th of April 2022. I hope everyone's doing great. Okay, so let's have a look at the Nasdaq then. So since the start of the year, out of the two of them, Nasdaq has clearly underperformed the S&P. I mean, they're both looking very much like a bear market, or at least a very severe correction that may still be going on for a little bit longer. But as you can see, there's definitely outperformance of the S&P relative to the Nasdaq. Out of the two of them, I would say the Nasdaq has a higher probability to have already formed the top for 2021, and I'm saying the very much a similar thing for Bitcoin. Bitcoin may very well come out of it eventually bullishly, but I've done so many videos on Bitcoin that I just think it's probably going to break down. There's too much supply coming into the market. All-time high correlation with Nasdaq and Bitcoin. I've been saying it for the last 3 months. The highs for the year are in, quite possibly very much longer than that, but as an absolute minimum, the highs for the year are in for Bitcoin. Looking back at the Nasdaq then, given that they're so correlated, I mean, if I take it off the log chart, it's very difficult to make a case that this high is going to get taken out before the end of the year. Now, the other concern is, once again, out of the two of them, given the situation with the dollar index, which obviously short term is going to pull back around these pivot level highs, but ultimately, I mean, I don't think it's going to stop there. I just think this is a bit of profit taking, which is absolutely fine. You know, people are taking profit around an area of liquidity. As per my last video, this is still going to go higher, more than likely. Almost certainly, the euro is going to hit parity. There's a very clear trend line there, and there's a very clear line in the sand, which is here. So this, to me, this pullback, to say the dollar is going to now do this is extremely unlikely and carries a 0% probability. This is still going to go higher somewhere around here, and then we may get a larger pullback. Ultimately, I can actually see a situation where this line eventually breaks, much like the 10-year yield, which has broken. Right? In effect, it has broken. I mean, it's just retracing, making a wave too. Ultimately, mortgage rates are definitely, well, let's take mortgage rates out of this for 1 second. They are linked to the 10-year yield. This line is all but broken, right? We are simply consolidating here, forming a wave two. Ultimately, we believe that is the one. This is a bull flag, and we're going to do this. And that is the same case all over the world. With all that being said, it's very hard to justify, a very, very bullish opinion on these Nasdaq stocks. I mean, they are trying very hard to keep Apple and Microsoft propped up, and really, it's the biggest level of manipulation I've seen probably since 1999, where they're keeping the big stocks propped up. Longer term, this may already, as per various YouTube videos over the last month or so, this may already be in a very long multi-year bear market. Something like that's a 1, that's a 2, 3, large consolidation wave 4, then a 5, or alternate to that, that's the 1, that's the 2, 1, 2, 3, 4, 5, 3, then a 4, then a 5. So that's the long-term count. Obviously, we're here on the weekly chart. The point being, for Nasdaq to now make a new high is very, very unlikely. So, what are the alternate counts? Well, this looks very much like a 5-wave impulse. Therefore, this can only be an A wave or a wave 1. Worst case scenario, absolute worst case scenario, that is actually a wave 1 coming down. In which case, if we end up doing something like this, Nasdaq could easily challenge the pre-crash of around 8 to 10,000. If it's not an impulsive wave down, it's at least a wave 1-to-1 logarithmic Fibonacci, and we are going to do 2 tutorials on Fibonacci, so those will be getting released on YouTube here pretty soon. That is then 11,896. And certainly that corresponds with the whole, we're going to bounce here eventually going in to the US midterms. I don't think, I just can't see this situation where it just does this into the US midterms. I don't think that's going to happen. My base case is still this correction is going to reverse itself somehow around summer, either later on this month in May. Well, we're not in May yet, but we're pretty much there. In May or in June, and then we're going to come out of it. I don't think, however, the highs get challenged. So how do we bounce at, let's call it 10, 11,000 and not make a new high? Well, and still be part of a larger correction? Well, that ABC could be part of a large triangle, which may last years, right? It could be something like this. So the NASDAQ might be basically, 3 or 4 months into a very, very long triangle sequence where it never makes a new high, but likewise, it never comes all the way back down to, let's say, 7, 8K. This is just an ABC of a much, much larger sequence going on. And this is what we've discussed on Bitcoin. It's just corrections within corrections. Something like this, to me, actually makes some sense. But given that it's been so difficult to trade this market, we're basically getting a gamma squeeze, then we're getting a dump, then we're getting a short squeeze, then we're getting a dump, then we're getting a short squeeze, and then people are basically selling all the rips. The dips aren't really genuine investing dips. The move in Facebook, PayPal, ultimately Facebook still goes down to 140, I think, and we're going to have a look at that today too. So I can see something like this. If it's not an ABC, part of a larger, WXYXZ. So basically what I'm trying to say is, I can see the NASDAQ doing something like this, where basically it's going to be range bound between, let's say, 10K and 14K. It never properly crashes to anywhere near the pandemic lows, but likewise, it never makes a new high. This kind of frustrating sideways action. So where is the next trade? Where is the next big move? Obviously, it's down here somewhere at the end of this C leg. And then we're going to get a nice bounce going into the US midterms, then probably pull back, then something like this, and then we'll eventually decide where this market wants to go. So that would be my one of my primary counts. Let's put it that way. Worst case scenario, it's not an ABC, it's a 1, 2, 3 down. Then of course we could go much, much lower. Now, let's also bring in the fractal from 2008, which we've been discussing in the group for quite some time. So all you need to do is travel all the way back to 2008. So let's just copy this exact fractal over to the lows. And let's just bring this up here. The reason this is so important is because this little B leg could end up forming a flat, something like this. So let's just go on the 3-day actually. Let's hope we can get some more slightly better price action. Yes, something like this. Right, so let's just condense that somewhat. So we end up doing something. Let's try and get that on there as exactly as we can. Right, so something like this. Right, once again, that does actually get you down to 8,400, but that's only if we are doing a 1, 2, 3, 4, 5 copy of 2007. The reason I wanted to show you this is that we can actually short squeeze out of here and then come back down, right? So we can actually have been here. We've done this move, and now we're going to do this, but there could be one more short squeeze here. This move from, 1786 to 1970, we could be playing that move prior to the move down. And that's basically what I'm trying to show here, that this could be this leg down, this could be this, and this little bit here may still short squeeze higher to, let's say, the 61.8, and thus forming an element of a flat pattern. Notice the 61.8 is here. So just for them to short squeeze this market one more time and basically screw the shorts, which they've been trying to do many, many times throughout this, very clearly a bear market. The most vicious rallies are in a bear market. This could go into a truncated ABC. So I'm open to that interpretation, where this may not collapse right here, right now, but we end up doing this. That gets the NASDAQ, let's say, back to 14,500, and then we end up going down. So obviously the count will then be, either a wave 1 or a wave A, ABC truncation, right? I suppose it could come all the way to 15,000, then come down, but let's just call it an ABC truncation, then a big C leg. So at time of doing video, the way I am reading this right now, I am open to two interpretations. One is we bear flag here and we go sideways. I mean, to me, this is not a secure low. This low right here, this is not secure at all. Very much a poor low. The auction, clearly the downside auction is not complete in any way. And, I feel that there's one more big dump here to come down. I'm open to the interpretation we could squeeze higher to squeeze out the shorts, because it's very hard to hold a short position whilst the market is going, 10-20% against you and there's a gamma squeeze going on. It's very, very hard to hold that short. I'm open to a 14,500 move, then we come down, or we flag here, then we come down. And as we've said, my feeling is that may very well be part of a much, much larger triangle sequence going on, which, if we zoom out once again, is basically relative to the wave 1-2 from over a decade ago, right? So that would then be the wave 4, either relative to all of this or relative to this. As we've said, 1, 2, 3, large 4, then a 5, or a 1, 2, 3, 4, 5 to make a 3, then a 4, then a 5. So either way, longer term, I'm sure the NASDAQ hits 50k within 10-15 years, but this correction, I get the feeling, may do this. Also, what supports this idea? Well, Tesla, I've gone back and forth on this. Very much looks like an X wave now. I mean, is that really a 1-2 now? I don't think so. It's just looking like there's a lot of damage there. There's a lot of damage there, and so you could even read that as a leading diagonal wave 1 coming down and a 1-2, right? Or as an absolute minimum, you can read that as an ABC coming down. So Tesla potentially has got lower to go. Facebook, as I've said, longer term, everyone's waiting for 82. Now, that is one hell of a squeeze that we've got here. You could actually, you could say it's bottomed out right here, right now, but I just, I get the feeling that it might, there's an argument to say it has bottomed, but I just don't feel that it has. You could read that as a 1, 2, 3, 4, 5. So that could be the A, that could be the C. See? In which case, you put your stop below the low. You're like, okay, we're going to make new highs. To me, that is a multi-year high up there. I don't see that high getting taken out for many, many years. But I just don't get the feeling that it's bottomed. I think everyone was too bearish. They had earnings which surprised to the upside, and many of these rallies are getting failed, and I still feel the NASDAQ has one more panic crash down. It may very well happen in the next couple of weeks. So my base case is this is not a 10-year low on Facebook yet. Facebook can still go lower. The two targets that we're looking for is 140 there. Nvidia, still the feeling is it can go lower, right? So this is the thing. How can the NASDAQ stay propped up when all of these stocks we still feel have more downside? There's only so long you can manipulate Apple and Microsoft to keep this market high. That is in my eyes, classic Wyckoff topping pattern. There's so much supply coming into this market and failed upthrusts above the key swing highs here that have gone nowhere. You never want to see that. You never want to see loads of volume come in, spike above a level, and then close below. That is setting up to go down to 1K, I think. And I've been saying it for a while. Amazon and Google, it's very hard for this NASDAQ to make new highs this year. Google as well, surely that's going down to 1K. So, or as absolute minimum, they're starting off with a 1 handle. Microsoft and Apple, let's not even go there because they're heavily manipulated. So, anyway, that's my current take on the NASDAQ. So if you like what we're doing here, please do like, share, and subscribe. There's various alternate accounts here. If you want to join the group for more detailed updates, let me know. Obviously, we do cover group requests, and there is a Financial Freedom Masterclass course if you guys want to take a look. Anyway, I'm going to wrap it up there. Be careful what you're doing. My feeling is overall, this is not over yet. This correction or this crash, whatever you want to call it, it's not over yet. However, I have no doubt a big buying opportunity is coming in these NASDAQ stocks here pretty soon. I'm not convinced it's here just yet. I think there has to be more panic and blood on the streets in the major stocks like Amazon, Google, and Facebook, and Nvidia, and even Netflix, mind you. I mean, we just, Netflix, I suppose people are nibbling here, and there's nothing wrong with that. We're basically looking at here then, right? We're looking at these key swing highs. There's some interesting volume profile references too. To me, there has to be buyers there. So there's a little bit more downside left before a very, very nice oversold bounce. Anyway, I'm going to wrap it up there. If you guys like what we're doing, come and join the group, and I'll catch you guys soon.